All right, guys, welcome. Welcome to the Saturday Stock Market Technical Analysis live stream. If you guys are new, well, I guess you guys, yeah, we could be new because I did open it up to the public. I want to talk to you about that real quick, and then we'll get into this. But typically what we do today, I give about 45 minutes to an hour. Sometimes I go a little longer, just depends on how I'm feeling or what my morning looks like. But I'll give you guys kind of a general wrap up of where the market ended out the week. Just look at some basic charts. Then we get into any kind of charts you guys want me to look at. Again, I'm just giving my analysis on the charts. It's usually pretty quick analysis, so it's, don't think of it as the end all be all, but it can be maybe something that you can kind of take some notes down if you're interested in a chart or a stock, and then do a little more deeper research on your own. Again, this channel is a way, it's a trading channel, stock market trading channel, and a technical analysis channel. One, it's a way for me to basically get out my thoughts about the market. I'm actively in the market pretty much every day, profitably. At least for the last year or so, we've been profitable. The 2022 market was very good to us because, again, that's a trader's market. So, when you have a market that's conducive to, using the technicals, using advanced skills, things that actually I teach here on this channel and in my course, that's the kind of market that, we like. And I think that kind of market should continue into the foreseeable future. And so I'm planning on having a really good 2023 as well. The kind of market we don't like is when we've got just dumb money, Fed pumping, all right? When the Fed's just pumping money and it's just this relentless bid, just basically just a bull market, especially induced by the Fed. You have really low volatility. That's how the last, really the last 10 years basically has been that way. But that's all changed at this point, and I believe that's going to remain that way for the near future. I'm not looking for a bear market that just drops down, 50%, and then we just start a new bull market for the next 10 years. So throw that out of your head. That's recency bias, if you guys are seeing that or thinking that. Let me get an audio check. Okay, audio is good. Thanks, guys. So, again, that's what I'm looking for. And if you guys are finding value in the channel, follow along, subscribe, join. And I've got some products I sell. One, the technical analysis course. Again, it's priced affordable, and really what I tried to do, just a straight, honest way to look at charts and how it's a trading strategy, essentially. Okay, it's a way to read charts and how to take trades, how to get position, risk reward analysis, but it's not, it's not based off of, I'm not pumping the YouTube stuff, trying to make a killing on that. My YouTube channel, and I want to talk to you guys about this real quick. My YouTube channel is, it doesn't grow very much. It's kind of stagnant. It basically has, got 15,000 subscribers. Thank you, everyone who's been with me for a while. We've been through the ups and downs. Obviously, I don't get everything right, and that will continue to remain. I will not get everything right, but I try to get most of it right. And so far, at least for the last year or so, that's been true. But one thing that I've been doing a little research, it looks like the member-only live streams that I've been doing kind of kills my general channel a little bit. YouTube sees those videos as videos that are available but has really low viewership, and the reason why it's low viewership is because I've been making them only for the members only, and then every now and then I open up one for the public. So I think I'd like to continue to do that as a value add for the membership. Again, the membership's only $5 a month. So in general, I think even the trade ideas that I'm throwing out, the individual trade ideas I'm giving the members, I do believe it is providing a lot of that value. But, I still would like to provide some of the private live stream value to the members. Maybe I'll move that to a different channel, guys. Just kind of a throwaway channel that is for the members, and it can be basically just a way for me to add that value over there without killing the regular channel. I don't know. At the end of the day, I don't want to hurt my regular channel. I mean, that's part of the process, right? We're trying to build a channel here. And so you guys let me know what you think about that. You know, chime in. If you're a member, let me know. If you're a non-member, let me know. Another option is I could just open up the live streams back open to the public. So the question, I guess, is one, as a member, do you think you would feel like I'm not providing enough value if I don't do the live streams for members only? Okay, and then two, if I move it over to another channel, is that going to be a big pain? So I'm looking at that kind of stuff. No moves right yet, but I'm just kind of looking. Okay, and that's it on that one. Okay, so yeah, if you guys want to join up as a member, whatever I do, I'm gonna provide value. All right, that's, you know, and I don't feel like it's that difficult to provide value for $5 a month. But at the end of the day, I try to provide as much value as I possibly can, regardless of what you're paying, because it's, you know, the money is, it's a supplement. It's just extra money for me. You know, it's not I don't rely on that money, so it's, you know. At the end of the day, I'm really just trying to provide value for you guys. It's fun. All right. So here we go. Let's get into the charts and the market analysis. I'll try to answer your guys' questions. Let me know what you guys are thinking. Try to keep your comments, 1 or 2, 3 comments, especially on the stock picks, so I can try to get to most of you guys, and then we'll get into it. Guys, hit that thumbs up if you haven't done so. That's supposed to help the channel. I don't know all the YouTube stuff. I don't know all the algorithms and all that, and honestly, I don't really have a lot of time to care too much, but you know, I kind of figured if I put out good, valuable content on the channel, it should get noticed. People say, hey, this guy is right a lot of the time. You know, hey, I'm making money because this guy's analysis, stuff like that. And it should be contagious, you know. I mean, when you provide value, it builds on itself. So that's kind of how my approach has been. All right. Now, market analysis, triple Qs. All right. So last week, guys, or really the last few weeks, I've marked it out in green. I usually will do that if I've got a really defined range. I just want to really everyone to focus in on, and that's kind of what I've done here. And this is going back. This is well, we're looking at the hourly chart, but in general, going back to kind of right before Christmas, December 22nd. Look at all these, you know, I'm trying to see the gaps, and like this is all the times that we basically were like bouncing within that range. So lots of reactions, pretty well defined range. One little false breakdown here. Actually kind of broke down a little false breakdown there. It was very telling to me when I saw these, and this is what I was pointing out. See that little hour candle? We were way down here at one point, and boom, they snapped it back up. This is just the market makers and algos playing games, but the range held. And so I was still very focused on this range. And again, I kept talking about, even though we were breaking down, in the private group, I said, guys, yeah, we started to break down, and especially I put out a post right here. I said, yeah, we kind of broke the range, but it was just not convincing of a sell-off. It's not impulsive. It just was kind of a drift lower, and it just didn't look convincing. So I stayed long. Why do I stay long? Well, bullish divergence, not convincing breakdown, things like that. So it looked like a stop kind of run, just clearing out some stops. And then Friday, just, you know, pretty impulsive, straight up, cleared the whole range, and then basically rallied above it. All right, so we closed above it. So what you guys probably should focus on next week, or at least what I will be. Looks like, you know, I do notice these candles here. So you've got this gap. See this gap right here? So we've got, and then kind of a level of resistance right in there, some reactions. So that's a key level, because now I've got some reactions here. I've got the gap. I've got this one, and now I have that one. All right, we'll call that close enough. So 1, 2, 3, that's 4 reactions. So that's kind of the near-term resistance. So likely what I think we probably do is at some point in the day maybe come down to this level of, which was resistance, should now be support. We could chop through it a little bit, but I think it's going to hold as support. All right, so you know, it's right around that 267.50. Again, you can chop through it a little, so you got to kind of give it a little wiggle room. The markets and levels, you know, you think of them more as something that can bend but not break. So it's kind of like this. You can go down through it, it's bending, but it doesn't break, and then it snaps back. So that's what I would be looking at. Don't hold your levels to the penny, and if it goes, 5 cents below that level, it's negated. That's not how the market works. So you got to give things a little bit of room. And the one lesson that I'll just give you guys out, I mean, this is just a lesson that if you haven't traded a lot, you'll learn this lesson. But I'd prefer to just tell it to you. If you come down and let's say you have this as a support level and you start dipping below, and down here you're panicking and you're sending me messages like, hey, we're below by 20 cents. Is that, have we broken? And is this, I see those messages from people when we're kind of slightly below a key level that I pointed out. One, what's the nature of how we got down below that level? All right, take that into consideration. All right, are we impulsively breaking through? Are we just grinding through? Okay, the nature of how we get down, that's important. And then two, if you can't take 20 cents below a key level and give your trade a little bit of room and think of levels as zones more than hard line levels, then you're too heavy in your position. Okay, and going too heavy in positions is pretty much a guaranteed way to lose money, because what will happen is your emotions take over. You can't logically just stick with a trade because you see the losses. You're looking at your P&L, and you see the money going down or whatever, and it's just like, I got to get out, and you just lock in the loss, and then things they reverse. So give them room. Now, obviously, what's the nature of breaking down? And if you impulsively start breaking down and it's convincing, okay, you need to take the loss and recognize when you're wrong. But that's just the nature of trading. Some of that I can't teach, but I can give those kind of key tips on that. So next time you see yourself in that situation, and we all get there, everyone is in that situation at some point in time, then recognize what that situation is. One way you can help alleviate that is lighten up your position, okay? Have a smaller position to where you're like, well, it's going against me, but it doesn't hurt. I can stick with it. That's kind of where you want to be at, okay? And then the other thing, another key thing is to be able to enter positions at good entries. And that's what I teach in this channel in this course, good entries. All right. So, yeah, hey, someone says they just noticed you can click on the perks. You know what? You can't see the stuff from the iPhone. Apple they're a bunch of, they're greedy basically, or I don't know. They're in some dispute with Google. They want revenue from YouTube or something, so they hide features on the iPhone. So, desktop's got all the stuff. And yeah, that's kind of the problem. All right. So we're going to get into it. All right. So now my levels, guys, is right here. Level of resistance right there. 270. It's about 270, we'll call it. The breakout of that should bring us up to this little gap fill area. That's from that former gap right there. 270, 272 or 272, 75 right in there. Okay. Probably get a reaction there. And then for me, I really only see this. I mean, this isn't even really much right here. So I'll just there's a little bit of a level right there. We could call it's minor, but 275.50 minor level. I really think we start getting up in there. We should probably run up to that 279.50 area. And that's the final target. All right. So anywhere near there, and again, I would want to step in a little early. You don't want to wait for the exact tick of that, but if we start getting close to there, then I will close out my longs and flip short. That's what I plan to do. We'll see how the chart lays out, but that's my plan for right now. All right. So let's see here, guys. Why is my microphone? Does my microphone sound okay? I feel like it's not using my good mic. It's like using my other mic. Yeah. Just give me 1 second. I want to make sure my good mic is on, which is right there. Okay. Is that better? Sorry, I got a webcam mic and I have this better like a Yeti mic. And I need to be able to pause my mic every now and then to clear my throat. All right. So, all right. So that's my trading plan for now, guys. And I suspect what will happen if we get up to this 279.50, we'll probably start to see some negative divergence showing up on the hourly chart. Okay, so that's that one. SPY. Or actually, let's look at the NASDAQ futures real quick. This is kind of a cleaner, pretty clean, it looks like. I was looking at it on Friday. So I think that we've got this, it's kind of right in here. So that's the level, and it's about 11, oh, what is it? 11,185-ish. You can see, okay, and we're right in there, and then, yeah. All right, so we break above that, and we should go higher. And my final target is right here. Okay, I can mark it out maybe in a different color. We'll go with like, I don't know, blue or something. Not blue. Let's go with green. I don't know. And that's up there at 11,490. That's consistent with that triple Q's final level of 279.50. Okay, so we might flag out here for a little while and then maybe make a final move up. I do think we get up there, but, you know, we'll keep an eye on it. IWM's kind of interesting as well. Again, small caps, they typically run with the tech sector. Here's the daily chart. So you do have this downtrend line, though, in small caps. All right, this is the bear market. So I think probably the max bounce would be maybe a test of this trend line. All right, I wouldn't give it much more. The 200 days up there, the trend line, big resistance. So I that's probably all I'd be looking for on that one. And that's in move. It's about, I don't know, 2.5% to 3% for now. Okay, we could go higher. We don't know how long this rally that just started maybe on Friday is going to last, but for now, that would be a target. And here's the hourly on the IWM. You can see resistance, 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 and then boom, broke above it. So we're above. Now, let's also be aware of the potential rug pull, okay? Come Monday, we fall back down into this zone, which I think we probably could gap down maybe somewhere around here, but if it's right in here, that's fine. It's probably going to rally. And we'll watch that. Obviously, they could just rug pull it and sell it down. If we're below some of these areas, if we start gapping way down here, that's no bueno. Okay, so if that happens, probably going down to those lower targets right away, as I pointed out. So it's all conditional, and I don't know how the market's going to open on Monday, but it was a bullish close on Friday. All right, let's. I'm going to get into your guys' stuff now. So we'll just look at a couple of these. Netflix. I don't see much interesting here. Now, okay, obviously there's a big gap overhead. We filled this gap right here, so I got to kind of clean this chart up. That gap's been filled, so we don't worry about that anymore. It will probably still kind of prove to be a little bit of a resistance. It's about 330.31, okay? So you break above that, then you've got these kind of gaps overhead, which, you know, you've got a level there and the final gap right there. So that would be a final target if we're going to get a strong rally in Netflix. Then, yeah, up around that 506.50. I wouldn't even, it's such a small gap. I would just, you know, you start getting close to this 458 or so, I just take my money right there. That's how I would play that. Nothing says we're going to get up there, though. A buy signal, I believe, would probably come on a break, an impulsive break above 330. All right, you want to look for a big, nice impulsive breakout above that, and that would be a buy signal. I don't see anything in the divergences telling me we're going to get that. I mean, we've got negative divergence, which looks like it started to play out. You know, you broke down kind of a back test maybe, but that's where I think it's going. But maybe a little more upside up to that. Maybe go test that 330 area again, and that would be a move up to about maybe another 5%. Sorry, guys, my throat's dry this morning. That's all I have on that. SOXX, semiconductors, kind of interesting. The thing I don't like about these, well, actually, there's not really anything I don't like about these, I suppose. We do have negative divergence. It's probably going to go make another divergent high, I guess. Because this pattern right in here was divergence, and each one of these little highs that I kind of ticked out here was on negative divergence. And you can see now the momentum indicators kind of reset. They're way down here. So, and look, you've almost got a bullish crossover there on the PPO. So I think maybe you go on up, keep the divergence, basically extend the divergence. This is just hypothetical, but I think it's going to look like that in the future. You know, something like that. It's going to keep the negative divergence, and then price, you know, is going to run up and make a kind of a little tick, a little top tick above the former high, and then that would probably be it. So that's, as of right now, that's what I'm expecting. Yeah, and there is or maybe up here, you know, there's resistance right here. That's decent resistance right up there at about 422. So, yep, that's what I'd be thinking on that one. OTSK. Hey, thanks Vascular for the super chat. Appreciate that. Oh, did I get that one right? Did you say OTSK? OTSK. Yeah, I don't know. I don't have that one. Is that Overstock? OSTK. That's probably what you want because you said OTSK. I believe this is a Bitcoin play. I think they switched their model and really jumped on the Bitcoin hype train. Clear downtrend, so that's for sure. So I'd say we got a trend line to watch. I can't make any trend lines really. Nothing that I really like. Probably that. It's about the best I can do. On this daily chart. I don't know. That's not my favorite. I guess we'll just go with this one. That's not my favorite either. Slight bullish divergence showing up on the RSI. Nothing really on the PPO. I don't have much here, to be honest. No trade for me. Yeah. I don't have anything on that one. Sorry. If it's not clear, then I just move on. There's no point in just trying to force a trade. MPW. What do these guys do? Medical properties. Is this a Reit? What's the dividend? 9%. This is a Reit. Some sort of a Reit. This isn't going to move a lot, but you don't really have bullish divergence, but maybe we've got some sort of support right in here. You've got obviously momentum moving higher. Okay. This, you know, it was an equal low. I guess you could say it's bullish divergence. We could probably go with that. It's close enough. So I'd watch this downtrend line here. That's your bear market. So the best I could say is probably a rally, maybe continued rally or grind sideways to the trend line. No, for me, it's too close to resistance to really want to take a trade on that one. But if you could get a breakout, you're probably going to run up to the 200, maybe pop it and fail. I think you fail at the 200. So that's really all I have on that one. This is P pass. I don't know which one you want me to look at here with PASS. So you're gonna have to tell me. I'll get back to you if I see it in the comments. All right, silver. I think silver is probably gonna sell off, have a correction. SLV is, you have an uptrend, so obviously it's in an uptrend, so I think pullback should be bought, but I think there's a pullback. One thing I was looking at was the silver futures. Kind of noticed, if I look at like the hourly, let's see here. I'm not sure what I was noticing. I thought I saw something last week, but I guess I didn't have it marked out. I'm not trading it right now. I don't know. That looks like an uptrend. It's not super clean, but it looks like, I think we broke, and it looks like they're going to sell off. Watch gold too, because I mean gold's kind of usually the one that's the guide. Gold's at resistance for sure. You've got this upward channel here. Looks like a bearish rising wedge a little bit. We're at resistance though, so you're probably going to see a pullback down to the bottom. Negative divergence is there on the RSI on the futures, and pretty much there on the PPO. Not confirmed, but it's equal high here. So higher high in price, lower high in the momentum RSI, equal high in the PPO. That's negative divergence. So I think you could chop here for a little while, but I think we're going to come down like that. And you probably buy that one in my mind. Okay, let's keep on going, guys. Just trying to work my way down the list. If you're new, at least at a minimum, give me a thumbs up. And if you're interested in learning, kind of a skill set here, this is, more than just me giving you guys trade ideas on YouTube, but you can learn this for yourself. And it takes practice, it takes time, but the general skills, I put them all out in my course. So, you can become experts as well. Check it out if you're interested. I think it's a good course. It seems, I get a lot of, I've pretty much gotten, almost all positive comments from the people that have taken it. So I know that there's at least good, simple teachings in there, and that's what I try to do. I'm not, by no means am I an entertainer, I'm not super polished when it comes to my presentation. But you guys show up for the information, not for the entertainment value. I know that. All right, so I'm just rolling down the list. Nug, well, I'm short-term bearish on gold right now. I think they're going to pull back. For Nug, you want to use the gold miners, and the GDX I think is a decent way to do it. But so you do have negative divergence right now. It's not confirmed, but it is there on the hourly, just starting to show up. Okay, so that's a divergent high. What you could watch is maybe just if you want to kind of really narrow it down, maybe this short-term little thing going on here. There's not much there. Probably let's jump over to the daily, see if I can get a cleaner chart. Here's the thing, my feelings about gold. I think there's some resistance that's close. Like on this one, you probably get, let me kind of get rid of that one. And then if I go in here, I've got a level right here. All right, so that would maybe be the upside for the miners, which is about 33, 39. Okay, so maybe a little more upside. And obviously if that happens, NUG's going to go up. But that's probably the level where we get some sort of a correction or something. You can see on the daily chart we also have negative divergence on the PPO and the RSI. It's not fully confirmed because these are still pointed up. So if gold continues to rally and the miners continue to rally, we could burn through that. But it is there now. So if it starts to turn down and confirm, okay, then that's going to be confirmed divergence. And that tells you that, okay, be on the lookout for a reversal. Doesn't tell you that it's time to just exit, but if I have negative divergence and I'm running into resistance, which is what this would be, then that's a good time to exit in my mind. All right, that's how I would do it. But if I have negative divergence and I'm not in any resistance zone, then yeah, I could continue to build on the divergence as price continues to rise. Okay, so that's that one. URI or UPS. Well, URI, I have, let me take a look. I might do UPS instead, but let's see if there's anything interesting here. That's kind of interesting. Yeah, I like that. I mean, see the negative divergence on the daily right there, just dropping off, momentum just dropping off. And price continues to kind of pop higher. Divergent high on Friday. Okay, so that's something to watch. I don't see any real levels of resistance. I mean, this was a level right here. Right in there. That's a decent level right there. And it's about 369, 75 or so, somewhere right in there. 1, 2, popped above it. Okay, so that's a breakout. It is a breakout. It is a divergent. It's a divergent breakout. So I would not take that breakout. I would look more for for me, the play here, the smarter play, I think, is to short on a break back below. Okay, I need to see it break back below 369.50, and you take the short there. Otherwise, this could continue to pop, and maybe it wants to run up to these all-time highs or these highs up here. Okay, that's possible. Maybe it pops up, hits the double top high, then fails. I'm not going to go long that. Not with negative divergence. Okay, I don't take breakouts with negative divergence. Just like I don't take breakdowns with positive divergence. I usually look the other way. So for me, this trade is a short. It's a short setup, but not actionable yet because there's no sell signal. All right, I'm going to add this to my short list. Oh, I already have it on my short list, guys. So let's look at, here's the thing. I'm more interested right now, at least next week, in the growth stocks for longs. Like the Lyft was one I gave out. I think I gave that to the private group. That looks decent. Resistance, 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 breakout, kind of at resistance here. So we need to see continuation, but 12.16, bullish divergence. All right, there's a nice clean trade idea. Big gap overhead. I don't think we get all the way up there, guys, but maybe up to the 200 or potentially up to this 20 bucks. Those are levels. And regardless, if we get up to the 200, I mean, from where that's at now, it's still a move of about 35% or so. That's about all I'd probably be willing to give it. You know, it could go higher, but why be greedy? And I think there's a lot of stocks like that. I think I heard someone say PayPal, or maybe I watched somebody on YouTube. Yeah, I mean, that looks decent. This kind of looks like it's bull flagging, kind of flagging out here. And then you look for the continuation, which as far as I can tell would be something like the 200. Yep, so that would be that one. Looks like it's bull flagging. You need to see the break, the continuation, but looks decent. All right. All right. Hey, Amaro, Amy, thanks for the super chat. He says, I took the course and it's amazing. I learned so much. Thank you. Also, there's a channel called Cool Name Dude, and he sounds just like you and explains the stock market. Is that your second channel? Nope, not me, but I'll check it out. Cool Name Dude. I know there's lots of people on YouTube giving analysis, and some are similar to mine, but, you know, I have my own perspective on it, so that's... But that's cool. Thanks. I'm glad you valued the course. Hopefully you're able to hopefully you're able to see how I put these together after taking the course. You're like, okay, because I'm really just reinforcing the concepts that I teach in there. Appreciate that super chat though. Nat Gas. I kind of like Nat Gas long, guys. In full disclosure, last week I did start to nibble. I didn't point it out on the channel because it's a little higher risk, and I really like to give the things that I feel really good about on the channel, because I kind of live and die by my picks. It's the unfortunate nature of, a channel is, if I have a bad pick, everybody is like, oh, you're horrible. And if I have a good pick, everybody's like, oh, you're great. Kind of live and die by it. But I did grab some Boyle. Small amount. You don't need a lot. It's leveraged. It's, and we'll see. I'm just looking for a bounce here in Nat Gas. If I go to the hourly chart, I've got this downward channel. Actually, this is the continuous one. Let me look at the other one. Yeah, see, you've got this downward kind of channel to mark out, something like about there. And we're still in that downward channel. So that is that's it. It's a downward channel right there. No indication of a reversal, but I'm seeing this bullish divergence showing up. Okay, it's not, there it is on the RSI. I'm seeing this bullish divergence show up here, telling me that we're bottoming. Okay, and so this was divergent lows. If we come down here, it's still going to be another divergent low. I think it will recover. So we're in the area where I like it as a buyer. I don't know exactly how long the divergence will continue, but and then if I roll out, I can see there's some support that we just hit on the daily right here. All right, that goes back to December of 21. Look at all those that big cluster. So that's good support, and yeah. That's it. That's the trade. We're kind of at major support on the daily, downward channel, but bullish divergence showing up on the hourly. And this thing, sometimes with this one, it's such a quick mover, and it's impulsive, and it just goes it just crashes and rips. That's all it does. So I stepped in on a starter position with Boyle. I don't chart Boyle. I really just use the Nat Gas futures, and then I'll just once this hits resistance, which is probably right about in here, we'll just say it's right about here, then I'd just close my Boyle trade. But that's the potential for a move of about, that's 30% right there. So, and then Boyle is leveraged, so it would be even more. That's what I think about Nat Gas. Take it at your own risk. Everything here is at your own risk. All right, how long have I been going? I got 15 more minutes. Okay, so oil. I haven't seen much in oil that I really love, and that I look at it every day, but it's just nothing that I really love. Here's the oil futures. It's in a downward channel, and I don't see any indication that that's changed. I've got some resistance right here. You can see on the futures, you've got support. That was broken, recovered, but we'll just treat that as 76.50 as resistance right now. And the next move lower is down here. I think that's support. It's about 66.50, we'll call it. Good support down there. I like that as support. See the reactions right through there. Support, little chop through there, but held it again. Held it right in here. Multiple reactions, very, very strong support down there. So what I would think, and what I'll be looking for is, a continuation down, and then hit that support, and I'm likely a buyer down here. Okay. We get down here, we start showing the bullish divergence, start seeing candlesticks, like running stops and recovering, wick candles, things like that. And it will tell me that, okay, we're probably going to hold. And then what we'll look for is the buy signal, which is the break of trend. So that's how I'm planning to play oil. And that's it. Amazon. I think Amazon's probably a buy, but we'll look here. There's big support. It looks like I've got some decent support here at about, it's about 80.50, and we're just right above it, close enough. You can see we got here on 81.40, so that's basically support. Bullish divergence. This is a daily chart, so this is a, pretty good time frame for finding swing trades, I think. There's your bullish divergence. At major support with bullish divergence, get down to the hourly. See, I've already kind of charted this one out because, I'm in triple Qs, so I want to make sure I've got some of these big players charted out. Not the cleanest chart for sure. I'm going to have to move that down there for now. But right at resistance, we'll just say that. So we need to see a more impulsive breakout to the upside, but you get that and you're likely going to run, and triple Qs should run too. And then Amazon's resistance is right here at 101.70. Yeah, that's good resistance. Resistance, little gap reaction there, but you can see when we broke the level, boom, big impulsive candle, support all through here. Boom, gap right to the level. Resistance, that's the level. So for me, if we're going to rally, we rally up to there. And, 101.20. And then obviously you have the downtrend line way up here too. So that is obviously a potential. You could get up there. But these are the two levels of major resistance. Okay? And that's up there at that trend line. So if I had to pick a direction, I would pick long, given the nature of this big bullish divergence on the daily chart and other breakouts and the triple Qs and all that. Hey, thanks thanks for the super chat. Another super chat. Can you please check ATVI, that's a semi, and BBY? All right, sure. We'll start off with BBY. Best Buy. Looks bullish. This trend line's not my favorite because I really only have 2 data points. So I should probably try to find a better. I just can't really find a better read, but maybe that. We could say it's that. I don't know. We'll just go benefit of the doubt and go right up here. Not the best trend line because you've only got one up here, and then I really only have the reaction there, so it's not the best, but we did get the gap right there. So, or I kind of have 3 reactions, I guess, because I've got the rejection and then this gap up right to it. So I think that's probably close enough. Rally into resistance, which is about 84, or it's about 85. Okay, you can see that. Look, support, resistance. That's all I see on that one. And then I love that. You see that right there. So 85 is resistance. See how you pop above it for 2 or 3 days? That's a stop rate, okay? And I suspect we had negative divergence up there, but let me look. Yeah, see on the hourly? See this RSPPO just dropping off right there? Just giving a lesson here on how to, how this stuff works. All right, so boom, you're popping up here. You're breaking above that key level of resistance right up here, but you got negative divergence. So boom, likely going to fail. Sure enough, you do. There's another rejection. All right, so 85. Let's just mark that. That's a key level, 85. You break above it, probably going to run up to 95.50. Okay, big resistance up there at 95.50. That's as much room as I'd give that one. Most likely. I mean, is this going to start a brand new bull run in the midst of a bear market? The stock market hasn't indicated that it started a new bull market, so this one's likely not going to either. So this is a bear market rally, and I think there's probably some more room to run, maybe up to that 95. But not for me. I wouldn't take a position on this until I saw a buy signal above 85. A break above 85 brings you to 95. Probably short it up there, is what I would think. That's all I got on that one. And then what else did you want? ATVI. Oh, this is not a semi. This is the game company. Okay. Choppy. You have negative divergence. It's not really confirmed. You're just starting to get it on the daily. I mean, it's there, but these are pointed up, so maybe it goes higher. If it starts to confirm and you turn down, that'll give you a clue. Okay, we're coming close to the top. But until you have that, there's no indication that we're going lower. This is the trend line I'd watch right here on the daily. So this can continue to rally on this trend line until you see a negative divergence, and then until you see a break of the trend line, there's no sell signal. So that's it. Yeah, and that's the only pattern I'd really focus on, to be honest, on this one. You do have, there's definitely a big level of resistance right up in here. And it's about that, anywhere, it's kind of a zone, but we'll just say anywhere from, oh, sorry guys, this chart is moving all over on me. That'd be my zone of resistance, so I think we could continue to rally up to there, but I would probably look for that to be the end of the run. Again, I don't see indications of a short until you have confirmed negative divergence. Look for the bearish PPO crossover here. You want to, if you get below the zero line right there, that's good. That's just confirmation. So if you have that confirming divergence showing up, then you look for the break of trend. Okay, no sell signal until you get that break of trend. And I don't see any indication yet to tell me that this is a short. So until then, I think it's probably going to continue to rally. Okay. And, that's about any zone of 81 up to about 82-ish, somewhere right in there. All right. I'm going to just start scanning a little bit. Guys, sorry if I didn't get to you. Drop me a thumbs up if you guys haven't done so and you're new. Also, if you're new, try out the private group. It's $5 a month. If you don't like it after 1 month, you've lost $5. Give me, at least give me a month. But in general, maybe a month or two. I'm throwing out ideas out there, and I kind of withhold some of the ideas for that group specifically because that's part of the value. And also, I can get into that group and make comments and leave you guys, updates very quickly and give you kind of a more tailored market read throughout the day. Whereas, like the YouTube channel, I'm not going to put out multiple videos every single day. I'm only going to do, one. Sometimes I'll do two if it's really cool stuff happening, but like a closing video. So try that out, and then check out the course. I haven't raised the price. I don't know. I was thinking about doing because it gets kind of tiring talking about the course, but at the same time, I have a product, so I want to promote it a little bit. But I was thinking about maybe putting it in like the vault, like Disney does, and just giving it a rest for a little while. But I don't know. All right, I'm going to start scanning, looking for anything that's interesting that at least that I know of or maybe haven't checked out yet. Microsoft. I'm bullish Triple Q, so I'm probably bullish Microsoft. Right. Oh, you guys, sorry if you can't hear me. I apologize. I'm just getting to these comments. I've got my mic way down here. Oh, I see. My mic was garbage, and then it got more crisp because I went to the better mic. Yeah, cool. That's what I'm trying to do. I mean, I've got, I don't know. They switch the gear on me randomly. The software does. Hey, I'm glad you bought that course. Or yeah, appreciate it. Hopefully, you guys find value. If there's areas of improvement, I'm always open to criticize me openly about areas I can improve, and I continue to try to get better. So, if you see something where you think I can improve, great. If you just get on and criticize me and say, "Oh, I'm a clown. I'm always wrong," because I get those people, and it's just like, that's just annoying to me because I'm not always wrong. And anybody that's been with me, I mean, I can literally go back to my videos and say, look at that. I talked about that. I was right there. I was right there. I was right there. Yeah, I was wrong here. I mean, I'm not going to get them all right, but to say I'm always wrong, there's just trolls. Some of the joy I get is to come back to the trolls and just say, well, thanks for your money. Got that one right. And they go away when I'm right. They come back when I'm wrong. Or like the perma bulls, if the market's rallying, that's when they come back and they think I'm a perma bear, but we're in a bear market, So I'm going to continue to have a bearish bias in a bear market, and I'm going to continue to look for areas to sell the rip. That's the more profitable side to be on. But there's bear market rallies. Tesla. Yeah, let's look at that one. I know this one's interesting for a lot of people. I'm interested in it. Okay, so Tesla. I've got some support right about, I've got kind of two areas of support. And this is the daily chart. First level of support is right about this 110. And then there's another level just below about 92-ish. Okay, so that's a level of support. You also have a level down here at 63.40. I don't think we're getting to 63.40 right now. Tesla sold off a lot, so to get down there, it could, but I just don't think so. If Tesla does that, the market's crashing down to that triple Qs is going down to that 238 level, which is possible. So, and so right now we're focused around this 110. I've got it about 109.40, but we'll just call it 110. And that's the key level we're focused on. Now, you can see, let me get down to the hourly chart. This is a bullish falling wedge pattern. This is bullish divergence. Okay, we hit that support level, which we didn't really have before, but now we've got three reactions, 1, 2, 3. And then on the top end, plenty of reactions up here on this hourly chart to validate that. And we broke above. Just like the triple Qs broke above its range, Tesla did too. So in my mind, it's a buy. It looks like it's rally time for this thing. And we're going to move up. Now, we've got some resistance, got some gaps and stuff. So you're probably going to find some reactions around these gaps. And that would be about 122, I believe, is probably next in line, maybe on Monday. And then if I go to the daily, this blue line right here, you can see there's that's a big level right in here. And I think that could be the potential. This could rally all the way up there. Okay, 182. That would definitely be the end of the road for the rally if it was to get up that high. And that would be a move of about 50, 60%. So that would be my max bounce, would be up in there. If we get anything close to that and you were long this thing, I would just take the money and run. Okay. So that's it on Tesla. I think we rally. All right, guys, it's about time. Maybe I'll do one more. Let me just kind of scan. Someone says, does Boyle have the ability to short? I think the so Boyle is the bullish leveraged natural gas ETF. Recognize natural gas. They call it the Widowmaker. So that's because it just explodes in any kind of up and down, and it just clears people out. So position sizing is key there. Okay, I can't stress that enough. I can't give any recommendations. I'm not telling you guys to buy that thing. I'm telling you, this is what I'm doing. But and then there's cold. I think cold is what it is, which is the inverse of Boyle. So cold obviously has been ripping. See this? How much has this gone up? It's gone up 187%. Okay, very strong move up, coming into some resistance, a little more upside maybe. So I don't know. I might be early on that Boyle one. Maybe we're going to run up and pop it and then fail. But there's some resistance there. Again, I use natural gas as my guideline, not these leveraged ones. And then that's cold, and then Boyle is the bullish one. So that's it. I don't chart these really. I chart nat gas. And again, very small position for me. Yeah, we don't care about the news, all right? The news is built into the price. At least that's the school of thought that I come from. So, the news it's priced in. Here's the thing. News comes out, all right? If you know about the news, let's say you heard about the news. If you don't take action on that news that maybe nobody knew about, if everybody was expecting the news and it's expected news, then usually it's already priced into this price of the stock. If it's unexpected news, just random stuff that pops up every now and then you have a very short time frame to price that in, and that's typically momentum trading, to jump on that quickly, as the algos will price that in and traders will price that in quickly. So by the time you hear about the news, or you read about it or see it on CNBC, it's priced in, guys. And so, the news, that's why, the news channel like Kramer and stuff, he can give you investing advice that will maybe play out in 5 years in a bull market. He's when you have a bull market, which is basically Kramer has had the Fed, the Fed pumping him his entire career. Okay, he's a baby boomer. And TNX, this is your 10-year treasury yield. We'll go to the weekly chart just to give you guys kind of a more fundamental stuff. But you go here, all right, look, there's your yield, your interest rates since 1981. Okay, so if you've been investing since 1981, which is pretty much everyone alive today for the most part, that's going back 50 years. So, if you're in your 20s, if you're 70 today, you were in your 20s back then. And so, most people's investment lifetime have experienced falling interest rates, which support the stock market. It's a bullish for the stock market and the real estate market. So all these baby boomers on YouTube that think they're geniuses, some of them made good plays, but recognize they've had help from the Federal Reserve for their entire life. Now, when you look at where we're at now, okay, this is where we're at now, okay? That trend on the interest rates has been broken. We are here. So I think we're in a new trend of rising interest rates, okay? And it's not going to go straight up. This is a really strong move, so I think we probably can backfill a while, and do that kind of stuff. That's possible. But, I think we're in a new trend of rising interest rates, which should be a headwind for the market. And that's why I believe that this bear market that we've started, is going to be a lot more than just a 2-year recession and then on to a new bull market. Because over the last, really every single time we've had a recession since 1981, you've got the Fed stepping in, pumping the market, dropping interest rates. All right, this is interest rates. All right, interest rates drop, interest rates. This is back in 2008. All right, this is where they started doing QE. and interest rates, and that's why you see the trend start to break. Okay, that's why you get abnormally below the trend, because this is QE, all right, and then this is COVID, crazy QE. Now we're above. The Fed can't really do money printing with inflation, and they are, trying to contain the interest rates, or not contain the interest rates. They're trying to contain the inflation. They just don't have the tools to continue this. So I think we remain in a bear market. We could go sideways while inflation runs hot, or we could, continue to fall in a bear market. Probably for a lot longer than you guys think. I don't buy options. I don't buy options. I sell short or I go long. Okay, so I don't trade options. I don't want to bring in another element of risk, which is the time factor. My analysis is, I want to be right. Okay, I want to make money and be right. So I look for, setups. I look for actionable trades. I let those trades play out and I take my profit. And with options, you can be right, but you can be wrong about the time and you still lose money. So, options to me is more like gambling. I know there's different strategies of selling premium and all that kind of stuff. But again, I just rather keep things simple. Okay. That's really the goal here. Is you guys heard the term KISS, keep it simple, stupid. Well, we just want to keep it simple and profit. So, no options for me. All right, guys. Well, I think that's all I got. I'm ready to go have some breakfast. So, thanks, guys, for joining in. Check out the products I've got out there. The live stream is always a good thing, and I'll think about how we're going to do these live streams. Maybe I'll do some public live streams for the next couple weeks just to see how that affects the channel. I'm just kind of interested to see what Google does with that kind of stuff. So, and then we'll figure that out. So, all right, guys, have a good weekend. Catch you on the next one.